Hello, namaste everyone. This is Rupi Raja and today I will give the NFO review for Kotak Nifty Top 10 Equal Weight Index. Talking about this Kotak Nifty Top 10 Equal Index Fund, the launch date is 7th April 2025. The end date of applying for this NFO is 21st April 2025 and the allotment date for the units will be on 20th April 2025. As of now, there will be no exit load if you redeem or switch off funds in this index fund because it's just an index fund, it is not an active fund. So that's why there is no exit load here and the scheme performance is measured against the Nifty Top 10 Equal Weight Index. Talking about what is NFO, NFO stands for New Fund Offering. And a new fund offer is the first time an investment firm offers a new mutual fund to its investors. It is just like an IPO, that is initial public offering, but this is for mutual funds. That's why it is called as NFO. The purpose of a NFO is to raise capital for the fund and attract new investors. Talking about mutual funds, what are they? A mutual fund is a financial vehicle that pools money from many investors to invest in a diversified portfolio of securities such as stocks, bonds, and other assets. If you know what is asset is a thing that gives you money, or it asset is something that puts money in your pocket. So investors buy shares in a mutual fund, becoming partial owners of all its holdings, which allows them to benefit from professional management and shared cost. Mutual fund is a fund of money wherein a professional manager manages your money, and in turn of for managing that money you have to pay money for it. So that is called as expense ratio. So that is a very good product for a retail investor who doesn't know a lot of things that are happening in the market, and it is a perfect product for someone who doesn't know how to invest in stock markets. Talking about this Kotak Nifty Top 10 Equal Weight Index Fund, the fund managers are Devendra Singhal, Satish Donapati, and Abhishek Bisain. The first two managers will manage the equity part of the mutual fund, and Abhishek will manage the debt part of the fund. Talking about the past experience of these fund managers and their fund performance, I have seen the performance and I feel that it is pretty good. They have perfectly managed the index funds that they are currently in charge of, and I believe that this management will try their best to imitate the benchmark and give good returns. As I've like already told that the most of the fund managed by these fund managers under the Kotak Fund House are old and their focus is majorly on index fund, so there is no issue thinking about the performance of these mutual fund managers. Talking about the investment objective, the investment objective of the scheme is to generate long-term capital growth by investing in securities of the Nifty Top 10 Equal Weight Index in the same proportion and weightage, with an aim to provide returns before expenses that track the total return of the index subject to tracking errors. So talking about this top 10 equal weight index, the 10-year CAGR is 15%, which is like 2% more than the Nifty 500 index. So I can say yes, it is a bit better than the index funds. Talking about this Nifty Top 10 Equal Index Fund, this fund will invest in the top 10 Nifty companies market cap wise, and since it is a equal weight index, it what it will do is like if you invest 100 rupees in this mutual fund, it will give 10 rupees to each of the top 10 Nifty companies. So if you give money equally to the top 10 companies, then you can say that it will have a very safe investment option. So talking about this mutual fund will track the performance of the top 10 stocks selected based on the 6-month average free float market capitalization from the Nifty 50. So if you see that this is different from an index fund wherein like it just follows whatever top 10 companies are, and it gives the money in proportion to the market cap of the company. So you can say that in the normal index fund you give money based on market cap, wherein here you give equal money to all the top 10 companies. So you can say that here your money is like equally distributed in all sectors and there is no domination on one sector. Based on the lifetime price to earning ratio of this index fund, it is currently trading 14% below the median. So valuation wise, it is a good time to start a SIP in this index fund. But I will show you one more point wherein you have to think about it, and it might change your mind as well about this equal weight index. Talking about the asset allocation, this mutual fund will allocate 95 to 100% in equity and equity related securities of this index, and it will allocate 0 to 5% in debt and money market instruments to manage the liquidity and redemptions. Talking about tax implications, short term capital gains Units are sold within 1 year, the gains are taxed at 20.8%, including surcharge. Talking about long term capital gains, for holding exceeding 1 year, gains are taxed at 12.5% after an exemption of 1.25 lakh per financial year. So, talking about IDCW option, dividends, if chosen, are taxed as per the investor's income tax slab with TDS applicable on payouts exceeding 5,000 rupees annually. So, IDCW stands for Income Distribution Cum Capital Withdrawal, and it refers to a mutual fund option wherein a portion of the fund's profits, including dividends and capital gains, are distributed to investors at regular intervals. Personally, I am not a fan of IDCW option, and if you want to go for IDCW option, I would suggest to please get a good mutual fund advisor. If you don't have a good mutual fund advisor, you can type your comments down in the comment section and I will reply to those, or I can even make a video talking about why IDCW is not a good option for retirement people. And talking about mutual fund in advising also, you can just put your questions below. I will try to answer to my best ability, or even I can make a video explaining. Talking about the difference between equal weight and normal index funds, the this mutual fund is a type of a weighted index, and weighted index have shown historically lower drawdowns compared to broader index, suggesting better resilience during volatility because of lower single stock risk. So talking about me personally, I will do SIP in equal weight index fund for better diversification and resilience across market cycles, and I will do a lump sum in equal weighted index fund as well, unless you are investing at the start of a clear bull run. Personally, I will not invest in this NFO, but I feel that after December 2025, I will put my money in market cap weighted index, wherein I can see that there are indications of a start of a new bull rally. So one more caveat I can give over here is that if you are a bit confused, my opinion, you should go for a large cap actively managed mutual fund or a flexi cap fund instead of passive ones like this, because the duration of rebalance in this index fund is very long at 6%. I feel that large cap funds or flexi cap funds given by the top asset management companies like Nippon India and HDFC are few ones which I would prefer to invest, start a SIP in current market scenario. If you are a bit confused, you can go to their website, see their expense ratio and make your or form your own opinion. Most of the people watching this are retailers who have a full-time job, so I suggest to have a satellite holding maximum 10% of a mutual fund in a fund like this. Since I am young, I will take more risk and invest in a stable core outperform mutual fund like a Parag Parikh Flexi Cap fund rather than a standalone bet on a top 10 equal weight index funds. So, talking about suitability for different investor types, if you are a conservative investor, you can start a SIP in this NFO. If you are a balanced investor, you can give a skip to this NFO. If you are an aggressive investor, you can also give a skip to this NFO. If you are a goal oriented investor, then yes, you can definitely start a SIP in this mutual fund. I am saying SIP and nowhere have written lump sum because currently this is a downward market, so it is best to start an SIP. If you are a passive investor, you can also start a SIP in this, but I would still suggest that yes, till December you can put your money in this, and but after December 2025, or when there are clear signs of bull rally, you can shift your money from this equal weight index to a Nifty 50 index fund. If you are a young investor, you can go for SIP in a large cap or flexi cap active mutual funds. Currently, the stock market will continue to go down with rally in large caps after some time. If you are a diversified investor and you have allocated good amount of percentage of your portfolio to gold, large cap, mid cap and small cap, then yes, I can definitely say you can allocate maximum 5 to 10% to this top 10 index fund. And if you are a speculative investor and you have a very short term mindset, I would suggest to save your money for some time, and if you want, you can put a lump sum in large cap mutual funds. So if you want to know about scheme details of this mutual fund, you can go to this website. I will put this link in the description of this video as well. So that's a wrap on today's NFO deep dive. We have crunched the numbers, dissected the story, and now it's your turn. What do you think? Drop your thoughts down below, hit that subscribe button, and let's keep decoding the market together. So thank you. This is Rupi Raja. Hope you have a nice day.